Break-even analysis, what if, goal seek, and scenario manager. So first we must know what is it. So profit modeling is a plan to make business goals profitable and achievable. And by profit modeling, we can to achieve this, we can use break-even analysis, which is a determining point where all costs are covered before making profit. So the expenses minus profits is equal to 0. What if scenario manager is that trying different scenarios without changing the original data so you can make comparison. Once again, the importance. Break-even analysis, determine minimum sales in order to plan for future financial planning and better decision making. What if goal seek? This can help us to determine input value in a formula to achieve a specific desired output. And we can use goal seek to do break-even analysis. What if scenario manager is creating different data results based on different business situations or scenarios, and this can be changed depending on the scenario's goal. Can be used for comparison. So the difference between goal seek and scenario manager is like this inputs a value and achieve one specific goal, but in scenario manager you can like tamper with different data. Break-even point formulas. So for units, break-even point units is fixed cost divided by selling price per unit minus variable cost per unit. I forgot the closing brackets. And then in dollars, if it's in dollars, the total fixed cost divided by contribution margin ratio. And what is contribution margin? It's basically the difference in selling price minus the variable cost per unit. And the contribution margin ratio is margin per unit divided by the item price. And as you can see, there are fixed costs and variable costs. So fixed cost is an independent variable and it does not change even if the volume increases or decreases. It is based on time rather than the quantity sold or produced by a business. So for example, it's rent, tax, salary, and insurance. While variable cost, and as the name suggests, is a variable. It can be changed according to the volume, such as raw materials, production supplies, commissions, delivery costs, and packaging. So question number 1. The shared stone brick company manufactures a standard stone block for the building industry. The production capacity for the year is 100k standard blocks, and the selling price per block is 1.6. The variable costs are 0.6 per brick, and the fixed costs are 60k per annum. And the question is to determine the break-even points in terms of output. I have listed all the givens here, and this the selling price and variable cost is per unit. And contribution margin, well, you don't need it, but it's basically this. Contribution margin is basically this. So it's 0.60. Oh, sorry, it's actually 1. It's supposed to be 1. Okay. And BP in units. So how much units do we need to sell in order to cover these two costs? So it's the fixed cost divided by the contribution margin, which is 1. So 60k divided by 1, still 60k. So we're gonna get into goal seek. So goal seek is a what if analysis tool that helps you to determine the input value needed in a formula to achieve a specific desired output. And goal seeks can be used for calculating a loan payment for like you don't know how much monthly loan you have to pay in this month, in these terms, or within this interest rate, Goalseek can help you. Same with grade calculation, GPA or form calculation, and budget forecasting. So firstly, I will use Goalseek to calculate grades and to see what grades do I need to achieve a grade that I want. Change our current one, this, to 70 by changing this. So firstly, just go set this cell, because this is the one we want to change, to the value of 70 by changing this cell. There you go. You have to get 80 in order to get 70. And secondly, I want to show you guys how to do the break-even point. But first, I'm going to use the same scenario that we have worked before, the breaks one. And I'm going to highlight the normal one without the break-even point in light blue. And then I'm going to work on the break-even point of the unit. But for the break-even analysis, I'm just going to highlight this to like light orange. And we want to know how much unit is needed just to cover the total cost, which is, as you can see, the fixed cost plus variable cost times by the unit produced. While the profit is this, revenue minus cost. So obviously we need Goalseek. We need to set the cell of the profit to 0, because break-even meaning is like when revenue covers, not making profits, covers the cost. By changing the cell of the, because this is unit produce, which is, oh wait, I made a mistake there by setting the cell of the profit. Okay, as you can see, this is the same exact amount as the one that we did manually. And then I'm gonna move to the second question. Using Goalseek, the market for blocks become much more competitive, and SBC reduces its price to 150 per brick, and sales still decline to 80k bricks, whilst costs rise relentlessly. Variable costs rise to 0.66 per brick and rises in business taxes, and other contributions increase fixed costs to 80k per annum. Is it still profitable? All of this changes, will we still get a profit? So the selling price actually decreased, and then the fixed cost increased, and then the variable cost increased, and the unit price decreased. So we're selling less now. So after all through that changes, we don't even make profit anymore. We don't, not even in like break-even point, we make a lot of loss. So by using Goalseek, we can change these items easily. So, and like this can automatically be computed because we're using formula. And now we're going to talk about scenario manager. So scenario manager, and it's a function within what if analysis, and this can help you to make changes in every like variable that you want without changing the original data, because it's kind of making it like in a separate table. And you can compare the data results in different business situations, and you can store multiple versions of the data. And we can change it depending on whatever we like. So I could just change the loan amount, but maybe I could, for another scenario, put loan amount and interest rate. So it's really up to you. And then this is my scenario for the original one, and I will show how to do the other scenarios. So first off, I personally like to create name from selection. So just, if you see, this is name. So when you get into scenario manager, it's more manageable. So just open scenario manager and then what if analysis, scenario manager, original. By changing the cells in here, we don't need to change it because, you know, I want to see, let's just say like I want to see different scenarios for the monthly payments. Okay, so this is just, see, if you change the name for this tables, sorry, these columns, it's all changed. If you didn't do the name definition, this all will be like B3, B4, and B5, which is, I personally don't really like it. Okay. And then we add another one. Let's say, just say scenario 2, because, well, okay. And then let's say the loan amount is not 800k but 600k now, and then the interest rate is 6% a year, and then the loan term is 25 years. And then add another one and make it scenario 3 because I'm kind of uncreative naming. I'm bad at naming. Just like, okay. And in here I have 500k, interest rate of 4, and the long term is, let's say, 50. Okay, and if you don't want to make a summary, like change into a new sheet, you can just like look at here and just like, this is the original, right? And then for the scenario, you can just like show it, oh, we have lower monthly payments. And then in scenario 3, sure, okay, it's about pretty much the same, but well, it's more expensive, I'd say. But if you want to compare it, all 3 of them together, you can just like click summary and then okay, and here you go. It's all the changes. This is the current value. This is the current value because like the last time I clicked on this one, but it's alright. And this is the original scenario. This scenario is the same as this one, and this scenario is the second scenario. So you can just like compare it straight, and well, if you want to see it, it's easier. So the relationship is that if we understand the data and how to process it, we can visualize it to other people in a manner that they understand, and the best way to present it. As well as these are the references that I use in my video, and that is all from me. Thank you.